Time now for the markets with Leighton Spann. Leighton, you say a big change for futures trading is here.
Trading for up to 22 hours a day. We'll have more on that in a moment. Also, since our last program, the first ending stock projections for the 2012-2013 marketing year are released. U.S. exports of short grain rice may grow in the future, as some analysts think the cattle sector may have reached a recovery area. Expanded electronic trading hours for grain futures takes effect Sunday evening, May 13th in Chicago. Trading will now be possible, as I said a moment ago, up to 22 hours per day. It had been 17 hours per day up until this change. Analyst Don Ruse says the big thing for him may be that trading will now be going on when the monthly crop supply and demand reports are released by the USDA.
But I think the big change is going to be the on-the-go trading, right through the reports, right through crop condition reports. And so you're going to have live action all the time and a lot of volatility. But, probably the trade will, like we always do, adjust to it and come out on the other end okay.
Speaking of crop reports, the USDA released its monthly supply-demand figures on Thursday morning, May 10th. Extension Ag economist John Michael Riley joined me in studio just a few hours after the release to discuss the market picture that the new numbers give us for corn and soybeans. John Michael, analysts were looking for tighter stocks, I believe, of old crop corn. Were they surprised or not?
They were surprised. The actual ending stock number came in not just above the average expectations, but above the highest expectation. 851 million bushels corn carryover from last year to this year. They were looking for that number to be closer to 758 million. So a bit of a shock there on old crop. New crop, not too much different. The carryover from this past year to this coming year pushed those ending stocks up more than expected, and so a big surprise, larger quantities all the way around for corn.
All right, what about the soybean picture? Surprises there?
Not as big a surprise, but actually in the opposite direction, a little tighter than expected. Those numbers, old crop 210 million bushels carried over. They were looking for that to be 221 million, so a little tighter than expected. Same thing for the new crop. This is the first month we're getting these expectations on 2012's crops. So all of that, no priors to that.
All right, we're less than 4 or 5 hours out from the report. Any idea here how the market has reacted so far?
Market's reacting very much in line with what the report came out. Corn, these current corn contracts down about 6 cents a bushel. If you go to the old crop or the December 2012 corn contract, down about 10 cents a bushel. Soybeans kind of the other picture. Old crop soybean contracts up about 20 cents, new crop contracts up about 25 cents. So the reaction is mostly in line with what we should expect.
As far as the livestock sector, who obviously uses corn as far as feeding, what will this mean for them?
Well, I think that's what really happened. If we look at look into those corn numbers, we've seen a big shift from corn feeding to wheat feeding, and that's why we are looking at larger stocks than most people expect, is because there was a big shift away from corn and into wheat.
Turning to cotton now, DTN is reporting higher U.S. ending stocks are expected for 2012-2013. Bearish USDA supply-demand estimates have long been anticipated, and despite planted area reductions in many countries, including China, India, and the United States, cotton production in 12-13 is still generally expected to exceed mill use. USA Rice Federation staff and members traveling in Japan this week report growing interest there in importing U.S. short grain rice. Last year's tsunami and the associated nuclear event there resulted in roughly 50,000 metric tons of rice being contaminated by radiation. In addition, about 4% of Japan's annual rice production cannot be grown now due to the continuing contamination in one region of the country. The USDA is already estimating that short grain rice production in California alone will increase 16% this year in anticipation of additional exports. Our trivia quiz will transition us into the livestock side of the markets this week. And here is our question. How much of the world's egg supply is produced by the United States? Your choices are 10%, 20%, 30%, and up to 50%. We'll have that answer coming up. The continuing economic impact of the recent media attention on lean, finely textured beef is becoming more defined. Beef Products Incorporated, the primary manufacturer of this product, said this week it is closing 3 plants in the U.S. permanently at the end of this month. BPI cited decreased demand for its products as the main reason for the closings. The company says that 650 people will lose their jobs as a result of the shutdowns. One plant in Nebraska processing the lean, finely textured beef will remain open, but at a reduced capacity. On a more positive note for the beef sector this week, analyst Don Roos thinks this market has reached a pivotal point in recent days. He admits the funds did get spooked by all the recent negative events involving cattle.
You got hit with the lean beef issue, then you got hit with BSE, but the market really was pretty strong, Mark. I mean, it went through those, and it took the hit, and now we've recovered. We think we put in a significant low in the cattle, probably an intermediate low, and the cash market this week, still showed us that we're running a big premium to the futures. So we think the downside there is probably limited. Third and fourth quarters turn pretty bullish.
Just before the feature story, here's the answer to the trivia quiz. It is A this week. The U.S. produces 10% of the world's egg supply, and by the way, May is National Egg Month.